Good morning. Welcome to the B.F. Anderson Technical Report for August the 18th. If it was easy, everyone would do it. You know, investing in the stock market is difficult. After 45 years of picking and buying stocks and selling stocks, I have really learned that having a discipline makes things easier. You know, Buffett says the biggest mistake most investors make is they tend to dabble, meaning they don't have a strategy. Having a strategy such as trend following, as far as focus investing, which is what we practice, has been very important in making my job easier, but it's not easy. But one of the numbers I wanted to look at today is something called market capitalization. It's a very simple formula. It's the current price of the stock times the number of outstanding shares. So why is this important? Well, when you're looking at an investment and you realize that you really need to set a goal for the investment. And if the company's market capitalization is either too high or too low, you need to be aware of that. So we tend to try to find companies that are small that hopefully will become big. And the problem I think comes in a lot of times is that there's a lot of companies out there that have been so discovered and so over-owned that their market capitalizations are like in the trillions of dollars, and so it's kind of something to be aware of. So let's look at how we're doing here. The NASDAQ continues to stay in an uptrend here. We've got the Golden Cross. Things are looking good there. We continue to maintain the rally. The mid cap, same thing. Golden Cross, uptrend. Mid caps look fine. New York Stock Exchange. All the stocks on the New York Stock Exchange, as you can see here, we're seeing a very consistent pattern of strength. Hopefully this continues. Hopefully the bottom of the market is in. We've been through a bear market here and it seems like we're coming out of it. This is the small cap stocks. This is a very important index. As you can see, very strong uptrend. Here is the S&P 500, same concept. You can see a very strong uptrend. So we're looking at 5 indexes. This is very broad. This is what you want to do. You don't want to look at just the Dow Jones Industrial Average. Now the aggression index, we're seeing a little bit of a pullback here after a pretty nice move. Now hopefully it doesn't roll over and do what we call a round trip, but so far we're looking good. The lower moving average has turned up. And, you know, what will more than likely happen, I would think, would be somewhat of a consolidation, then hopefully a breakout, kind of similar to this pattern in here. Now, one of the indicators that we do keep a close eye on is called the trend lines. And this is where we take the 35-week moving average and we compare it to the NASDAQ and the S&P 500. As you can see here, for the first time, we are starting to break above that 35-week moving average. Now, the rule is we need to break above it and stay above it for at least 2 consecutive weeks. So the same thing for the S&P, but the S&P actually is stronger. It has broken above, and we are in the second week above the 35-week moving average. So this is somewhat of a confirmation that maybe the bottom has been put in. Now, I would continue to take note here that the price of oil has kind of gone into a downtrend here. It has broken below the 200-day moving average. The financial stocks are starting to show some uptrend strength. We need to get back above that 200-day. And it really is amazing how interest rates have just stayed flat as everyone talks about inflation. You know, the market is a discounting mechanism, and the bond market is very efficient. And this is the 10-year Treasury note. If inflation was going to continue to be a major problem, I would think that you would see a higher interest rate on the 10-year. Now, the other good news here on the number of new lows on the New York Stock Exchange, we're really starting to get down into a very acceptable level. We want to stay below 40 a day. So like I said last week, this is somewhat of an indication that maybe the selling has dried up. Now, on trend strength, big improvement here. What we're doing here is we've got 8 moving averages, and right now the trend strength is at the highest reading we've seen in about 16 months, which is plus 75%. Now on the S&P, which we noted was even stronger, we're at a trend strength of 87.5. So usually in the past, and history tends to repeat, as Warren Buffett says, it tends to rhyme. What we've noticed in the past is that once we make that major low and sentiment readings go through the roof, which they've done, and once you get past that 50% trend strength, usually is a positive situation. Also, volatility index, you can see here on the VIX, volatility is really coming down. We're below 20, which is kind of a key area, so we'll just have to see. But it is an improvement. Now, on the top 5 stocks that we're keeping an eye on, this is in phase. We got a gap up buy signal right here. Then we got an ascending flag. We're starting to kind of soften a little bit, rolling over somewhat. So I would kind of hold off on this one right now. But we do own the stock. We continue to own the stock. Hopefully we get back into a strong uptrend, which would be a breakout, 310, 305 in that area. Here is EQT, which is natural gas, mainly natural gas, but also oil. You can see here it's actually in a very favorable pattern, even with the price of oil dropping off. This is Lantheus, which is healthcare. We continue to see medical-related stocks do well. It's holding very nicely above that 10-day moving average in a nice uptrend. Here is a company called New Fortress Energy. This is gas distribution. Very, very strong, powerful uptrend. So the energy stocks, even though oil has pulled back, continue to look favorable. Here is Petro Brasilio, which is Petrobras. And you can see here very strong uptrend holding above that 10-day moving average. So in conclusion, I would like to say that the market is showing signs of a recovery. We'll have to see if we have problems, meaning that we retest the lows or whatever. But we have to take it a day at a time. That's the strategy. Our strategy is we deal with what is happening today, and that's how we handle things. If you have any questions, please give me a call.